Alright guys, so today we're going to go through literally the most accurate trading pattern that you will ever find on the internet. And it really doesn't matter whether or not you trade Forex like I do, stocks, crypto, indices, gold, oils. It really doesn't matter. This is by far the most accurate trading pattern you will ever see. And it's what we trade in the FTR trading community successfully pretty much every day. And I'm going to show you exactly how you can take profits from the market today if you just follow this very simple plan. So if you can think back to about 18 months ago, I created a video which was all about trading pullbacks, and that's what we do at FTR. So just to recap your memory, it was about trading this type of pattern. Really simply, we're looking for pullbacks in the market, trying to get involved in an area where price has pulled back to left behind an order block or people stuck in the market, and we wanted to get tagged into a move and then trade our way pretty much up to the previous breaking point. Well, that's great, and that has a fantastic percentage rate. It's around about 70% of following that general pattern. But what I didn't go into at that moment in time was the very next step of what you could do, and the accuracy level is insane. You're looking at upwards of 90%, sometimes up to 96%, depending on what currency pair you're using, whether or not you're using gold or oil or certain stocks that I've looked at. You're literally looking at 95, 96%. And the way to do that is you are going to be waiting for a pullback on this pattern. So first of all, you've got to understand that there's certain concepts being used here, and there are structural breaks forming, okay? So if you start off at the base down here and you work your way up, we call that a leg. That can be done with multiple candles. So look over here on my left-hand chart. This is the daily chart for Euro USD, okay? The leg which we're currently looking at is from down here to up here, okay? So that is one leg going up. The next leg is literally going from the top down to where we currently are, but it's not over with yet. That's just part of the next leg. If we look at the bottom left chart, that is the H4, and we have one leg going from down here to up there. The next leg has pressed down. It has broken the structure. So same as what I've done just here. It's broken the structure of the lows. And then we retraced a little bit, got involved in an order block, and we have worked our way down to break the next leg. So this is just replicating what happens on the charts on a regular basis. It's really, really simple. The chart takes off, it pulls back, it takes off, it pulls back. That's known as a trending market. It's really simple. It's a trending market. If you're following a structural basis, you have a trending market about 70% of the time. The part which I did not explain in the previous video, which I'll tag up in, I don't know, one of these corners somewhere, is what happens when you start to change the trend, and then what is likely to happen immediately after that. So for you to change the trend, what we need to do is get a break of the most recent low, okay? So if we're looking at the last break point, so the last break of structure, which is over here, so that's known as a boss or a break of structure in the market. What happens when you break down below the lowest point from that previous break? That is called a change of character or a change of direction. And that was, I think, coined by a guy called Richard Wyckoff, I think, about 80 years ago, maybe 100 years ago. So this has been around for donkey's years. But something that a lot of SMC traders won't tell you is that what we are trading is a very simplified head and shoulders pattern. Because once you've had the break of structure and then you've had the change of character, the move in the opposite direction, you are most likely above 90% accuracy for price to pull back, get involved somewhere on this leg, okay? It doesn't matter. In a second, I will explain that. It doesn't matter before you break down and continue that trend with a further break of structure just here to move down. Now in FTR, we have refined where to get involved So we know how to take the most profits out of the market, and we do it day in, day out, looking at multiple currency pairs. And it really doesn't matter what time frame you're using, what currency, and some of the guys will trade crypto, some will trade gold. It doesn't matter. It's exactly the same across the board. I'm gonna draw it in the opposite direction. So just to take it simple, we have a starting point and we have a leg down. We have a pullback leg, so a second leg. It can be multiple candles. And then we have our first break of structure. Then what we're looking for is a pullback and a break back in the opposite direction, taking the highest point between the previous break of structure. So what I mean by that is get the previous low right there and go to the breaking point. Wherever it got broken, just go to that and go to the furthest point. That's where I mark my chalk area. And then we're waiting for that to be broken. Now, you can expect with literally 9 out of 10 or 19 out of 20 in some cases of price pulling back and then continuing in that direction. And it can be improved even further. But I'm just going to show you really simply on the charts where we would find this, just using the chart that we've got today, where it may have happened multiple times just on Euro USD. And I can guarantee you that the result will be a win. So here we are on Euro USD, and I want to draw your attention to this area just up here, okay? This was an area which we were looking at on the charts over the weekend, thinking that this might be a reversal point. Based on the higher time frame, multiple factors, you'll need to watch the rest of my videos for that to make sense, or just join us at FTR because we trade it every day. We mark up our charts every day, so we know exactly where we're getting in. But I just want to draw your attention to this happening right here. I'm going to use the bar replay tool just to make sense of this. So right here on the M15, we have a standard break of structure. Really simple, just looking at these three candles. We've got a break of structure and we've currently got the lowest point being this blue candle right there. So the base of the blue candle, the bottom wick. If we click along, the market pushes up. Therefore, typically speaking, the breaker structure moves up with it. Okay, that's the new breaking high which we want to try and get past to progress further in the market. But because of our confluences that we use, we knew that we were looking at this area as a potential reversal point for us, where we would be looking specifically for this chalk formation, this change of character, and have this low being broken, and for us to continue the market down. Because if we look at the higher time frames, we've got the daily up here, which is starting to move down, or it has been moving down for the last couple of weeks. We've got a very, very good viewpoint of what's happening to the market on a grander scale, and we just want to go in the same direction as the trend primarily. So if I click along, we've got the first sign of a pullback. We've got a lower high being created. There's not been a new high printed. So if we were to break upwards, we would have another boss, and we would just move our chalk line to the apex, okay, to the part where it's just the lowest. But we don't get that. We get our first sign of a pullback, which is a lower high. Next candle, we have our chalk, which is the change of character. It's the first indication really that the market has run out of steam in its direction. You couple that with the confluences that we use at FTR, and we know that we are very highly probable of being on a winning trade if we can get involved. So all what we do now is we are looking for an entry to get involved. So initially we are going to be looking for an order block. We're looking for basically an area where there's some supply coming into the market, because we're looking to take a sell. For support and resistance traders, we're looking for resistance. All right, so we're looking for a rejection out of this area. Now we will place our trade. We've got certain trade parameters that we try to take, and that's roughly what the entry would be, just a little bit lower than that. And our targets are going to be down, breaking the lows that we previously broken. All right, it's relatively simple. So I'm just going to click on a couple of candles, and I know that this is 3 in the morning. I know a lot of people are going to talk about that, but for the Americans, that's relatively normal. That's fine. In the UK, you may have missed this one, but you see them every day, so there's no shortage. Okay, so let's click on a little bit. Price has continued on its journey down. Okay, so market's moving down, 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 down further, a little bit further. So time's getting on. It's now 5 a.m. in the UK, continuing down. And there we have it. We're starting to get our pullback, and this is where you could have got involved. Okay, so we now need to try and mark out where our entry is going to be if it's not going to be up here. Okay, because we know that we've got above a 90% chance that the next direction is going to be a further break of this new low that has been put in. We have such a high probability. We can take a risk on 3 or 4 of these trades and still be profitable. So think of that. In reality, you're only going to have 1 or 2 areas where you could get involved in an entry. So you do that over an extended period of time, you have a very profitable trading plan. Okay, so what I would be looking at is here first, round about here, and I'd be looking there. So I would look to try to replicate this, and again, follow the trade actually to down here. And that's what I want to do. It's really quite simple. It's not a difficult way to trade, but you just have to be patient. They do happen. They happen most days. And if you're trading multiple pairs, you're going to have plenty of these entries. So let's keep on going. The market is pressed into the area where we would be getting involved. And then we get our aggressive down move. And then what have we been left with? We've been left with another order block. Okay, so there's another one which is being created right here. So we could enter another trade off of here. There we go, we've had that breaker structure. But we know now that we've got a 70+% chance that we're going to continue in that zigzag move down. So we're expecting that we've got a 70% chance that this is going to happen. We've got involved in a key area on a higher time frame. We're targeting the next time frame further down. We should be taking these trades. Here we go, we would get tagged into that. We've got our breaker structure now moving down to here. There we have it. Again, it's really not difficult. And what's the time now in the UK? 7:30. Most traders will be trading these. Okay. Again, we've been left behind with another order block. Okay. Right there. I'm going to clear some of these off the chart just to make it a little bit cleaner for you. There's this one which hasn't been entered yet. So I'll just remove that temporarily. We've got these two which we're in, which is great. And we've got another one that we're going to potentially enter from, which is going to be about here. And again, we're going to follow that down. So there was our initial pullback. Again, we had another pullback. Did we get the entry? We would have got an entry if you went from the baseline. I don't, so I would have missed that one. But there are more than enough of these trades to take. Let's just see how it played out in the end. See, price came back, retested that area again. And it just went and went and went. So would we have reached profit on these trades? That was the higher time frame low. That would be the target. And look at this. This is just on the 15-minute time frame on one day. And of course, the market doesn't trend as fast as that every day. Of course, you get a little bit of chop in places like this. But there are multiple ways to trade this, and we do it probably the best out there. It's FTR. I've put the link below. I don't plug the community that often or that much at all, but it's where I trade. It's the strategies which I trade, which is shared in there, and I trade with you guys. So there is a 17R trade, plus a 12, plus if you'd have got into this, let's say off the base, another 12. So what's that? 24, 31, 41, 41%, all by the time you've had breakfast. I don't think you can get much better than that. So I'm just going to recap this, okay, really quickly. We're just going to recap it. We're again going from a starting point. We're pushing up. So we've got a leg going up. We're waiting for a pullback and then another break up, okay? So we're looking at a break of structure at this point. We then may get another pullback and then another break of structure, and also that is fine. But let's say we're now coupling this with one of our confluences that we use, or several of our confluences which we use at FTR, and we know this is an area which we're expecting a reversal at, not just anticipating, but expecting a reversal at. And then we do get it, and price breaks down and breaks below this structure, otherwise known as CHOC in modern day trading and standard SMC. And you get that. All what we're looking for next is an excuse to get involved on this pullback. we're looking for almost anything. And this is where it doesn't matter if you're subjective, okay? It does not matter. You can just get involved on almost anything. And if you go back and measure, so here's your little bonus. If you go back and measure how deep this pullback is on average, what you need to do is make sure that your target is going to be further away than that, because with an accuracy of 9 times out of 10 that pullback is then going to go on to trade, you can pretty much just take the trade from here, put your stop loss right at the top and target a 1 to 2, and you're going to make a fortune in 3 months. So this is how we trade. This is one of our absolute solid methodologies that you do not need to stress about. It happens all the time, but there's certain times of the day where it works best. There's certain pairs where it works best, but across the board, you should get around 90%. I hope this has been helpful. If you think it's great, make sure that you do subscribe to the channel, because I give away a fair bit of my strategy and it's all backed by statistics and 7 years of solid trading. And if you want to join us, it's FTR. The link is below. We'll look forward to joining you. See you in there.